Ladies and gentlemen, welcome to day 2, episode 2 of our February webinar series about getting ahead of the growth opportunity in China. Yesterday, we were looking at how to save your brand in China, and today we're going to be talking about the China Incorporation Blueprint. We've got a whole series of topics this week, all about preparing yourself for the Chinese market. Now, my belief is that in order to get ahead of the growth opportunity, it means that we try to minimize the amount of roadblocks and obstacles that get in our way. And in order to be able to do that, we need to prepare ourselves by really sitting down and thinking about the strategy and the action points and actually ticking off those action points, getting them done in order to be able to avoid those roadblocks and those obstacles. The point of this webinar series in February is all about laying a solid foundation in the Chinese market in order to be able to scale up and get ahead of that growth opportunity in China at the speed that you would like to get to that, right? You have to be aware that China changes very fast, and you also have to be aware that you will have the ability to scale up phenomenally quickly. It's whether you have the resources and the capacity to maintain that. So getting ahead of the growth opportunity in China is all about preparing yourself, all right? It's about preparing yourself, your team, your company, your third parties that are in your ecosystem to make sure you're creating this solid foundation by getting into the market. Now, before we start today's presentation, I just want to share how the webinar works. We use Zoom meetings, so if you run into any technical issues, unfortunately, I cannot help you. Just log off, log back in. If you're still running into issues, just know that you can watch the recording. That'll be up on the YouTube channel later today. The whole point of this webinar series is that we're here to teach you, educate you, ask you questions. You have the ability to ask us questions, right? This is a two-way street where we are sharing comments, sharing feedback. It is 60 minutes of your time spent, so please make it valuable, right? Use it wisely. There will be a Q&A at the end of today's session, and we will ask every question that comes on. So it'll be a first come, first served principle. The webinar is for you if you are a newbie to China, meaning that you haven't transacted into China yet, but you've found certain opportunities and you're evaluating those opportunities, you're evaluating those returns on investment, and you're looking to gain a China education on how to enter the market and create the sound foundation. If you're a startup in China, you've probably been focusing for 1 to 3 years purely on the transactions that are occurring within the company versus really on the administrative side, the compliance side of the business. You perhaps also haven't had the ability to evaluate whether it makes sense to have an on-the-ground structure at this point or whether to have any certain amount of headcount. So what I would love to know from the audience today that's here live, as well as those that are watching on replay, are you a newbie or are you a startup? Please do provide me a little bit about your background. It'd be great for me to have an understanding of where you're at. Now, the 5 days today, like I said, yesterday we were talking about how to save your brand in China. Today we're talking about the China Incorporation Blueprint. And on Wednesday, one of the biggest problems that companies face is how to start your business with your China accountant. Now, I say China accountant because in reality, this accountant should be in China, but it could also be with your accountant that's abroad who turns into a China accountant. And I'll explain that more in details tomorrow. But on Thursday, we'll talk about how to recruit and hire your first employees, what options are available to you. And session 5 will be how to choose the right people for your corporate management in China to make those ultimate decisions in terms of scaling up and moving forward. Now, your China expert for the week is me. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I am 18 years in the corporate services and compliance sector, meaning that for 18 years, I've helped 100% of foreign investors get into the Chinese market. I've helped over 500 companies with their market entry, with their strategy development, with their implementation, whether it's setting up entities or actually just simply transacting back and forth, and then ultimately their scale and their growth in the market. One of the beauties about China over the last 18 years is how it has matured itself into matured itself from being the wild, wild west into really a well-developed society. And from an administrative point of view, a lot of the things that are needed to create this sound foundation of doing business in China can be done. There are system processes that can be developed. And so this whole week, we are looking at these methodologies, these processes that can be developed. And last but not least, before we start today's presentation, I just want to highlight, if you have not received a copy of my ebook, The 10 Biggest Mistakes Companies Make in China, then just email me at christina@woodburnglobal.com. This is my opinion of what the 10 biggest mistakes are. And it's not just within companies, it's also within the leaders themselves that are expanding their businesses into China and what faults they may have as they are doing this expansion into China. It's a great read. It's a short read. So if you're interested in receiving this complimentary copy, just email me. So today we're starting off with the China Incorporation blueprint. What is this blueprint that I am talking about? Well, before we start on what the blueprint is, which is the solution to everything, what I want to focus on is what are the problems for foreign investors as they are establishing their businesses in China. All right. So let's start off with what the problems are. So the first problem that we see is that they're unfamiliar with the incorporation process. They don't understand the timeline. They're confused by the document list. They're astounded by the amount of documents. And ultimately, they've received no transparency regarding the key considerations that need to be made by establishing the entity in China, both in the short and in the long term. And they have no time and thought process. No time and thought process is actually being taken to understand and make those key considerations. A lot of companies try to squeeze their budgets and maybe not use appropriate providers who educate you on these key considerations that have to be made. And as a consequence, these providers are actually making those decisions for you, which is not always recommended because it can definitely lead to severe obstacles and roadblocks as you develop and scale up your business. So I want to take this away from you. I want to provide you all with clarity and transparency. So we're going to start off with the basics, which is the process and the timeline. Now, just to emphasize, these are all estimates, okay? A lot of it will come down to the feedback provided by you, because ultimately my philosophy is I'm not the decision maker about setting up your company in China, you are. But I will give you all of the information that is necessary for you to make a sound decision on how to establish that entity. And it's up to you on how quickly you process that decision making. All right, how long are you actually going to take? So this is the establishment of a company. There are 6 steps. One is the consulting and drafting of the application documents. There's the name approval, which is a Chinese name approval, which is a bit of a vicious circle because you need to have a registered office address to do that application. You then do an online declaration where you also have to be careful because in places like Shanghai, Beijing, Guangzhou, the online systems are pretty matured. But in the tier 2, tier 3, tier 4 cities, although they are supposed to be doing these online declarations, in many of the instances, the online software is not up to date. So when you're trying to upload documents into the system, it doesn't work. So what I would suggest is if you are in the tier 2, tier 3 city, although you have to do the online declaration, it's best to do it at the government office, not from your own office, right? The next step is the business license, which is going to then be issued. And then you've got the registration at the Public Security Bureau for the CHOPS that are going to be issued. And then you've got a CA application. Now, a CA application is where you then receive a token. And this token is used to provide you with all of the up-to-date information regarding your company. It logs you into the Ministry of Commerce's office and you get all of this information and data. The next is the post-registration. So basically here you've got your business license, you're up and running, so to speak. But then if you are in a specific industry which requires additional licenses like food and beverage, accounting, there are other, if you're distributing chemicals, there will be specific licenses that are needed. So I provided an example here of the food and beverage license, where this happens after you get the business license. And there are certain criteria that you have to follow. It's important to know what these criteria are prior to establishing your company, because this might dictate where your location will be in China. It might dictate which district in a city you'll be located in. It might dictate how many employees you have to have from day one. It might dictate a whole bunch of criteria that you have to then abide by. All right. Once this license is achieved, now if you're not in an industry or sector that requires additional licenses, you can completely eliminate step 7, okay, which is the orange step. Then you're going to go and apply for the bank accounts, which currently takes longer than actually registering the company. Definitely takes a long time, especially if you're using one of the foreign Western banks. Then you do your tax registration. And then if you're doing any form of trade, so import, export, domestic sales, manufacturing, you will have to complete steps 10, 11, 12, and 13, which are all related to trade licenses, customs licenses, etc. All right. But this is basically your guideline of the step-by-step process it takes to register your company in China. Now the document list. Just to highlight, there are 2 slides to this. This is the full document list. It seems extremely overwhelming. Ultimately, it really isn't, because again, here, the government has done a system process whereby once you've done the online declaration, all of these application forms, the articles of association, all that are generated from the system and you print those out. Now, in documents like 2, 3, and 4, which is the articles of association, we definitely recommend that updates are made. So that the company bylaws, which are the articles of association, abide by what you physically want to do and what powers of attorney you want to have within your company. The rest is pretty much standardized. Documents 14 and 15, which I've highlighted in red, are vital. These are the company, or not the company, these are the shareholders' documents that have to be notarized by a series of notaries. And then finally, the Chinese embassy abroad. So these documents, if I use the UK as an example, these documents would have to first be notarized by a local notary. Then they go to the FDCO, which I now forget in my head what that is, but it's a government organization where it has to be notarized. And then it goes to the Chinese embassy. You have to take all of that into account in terms of timeframes, right? And then you've got passport copies of everybody that's going to be in the corporate management. You've got all of the documents, the lease documents that would be required for your registered office address as well. If you've got any questions about the document lists or the processes, don't hesitate to reach out. Just know it is a very old-fashioned process in that I just, for example, signed a document through DocuSign. I can't sign things through DocuSign. In China, that's not accepted. So you do have to print out documents, use a ballpoint pen, which I've got right here, just to show you. You have to use this type of a pen. I'll put in my camera. Ballpoint pens are not permitted. You have to have some form of ink pen in black color. And you just have to sign all of these documents to get your entity set up. Now let's get started on the China Incorporation blueprint. For me, there is a blueprint on what key decisions have to be made as you're establishing your entity. And what we've done internally is we've created the type of questionnaire that we ask you to fill in based on all the decisions you've made on the structure of the company. And we're more than happy to have back and forth conversations on this, because what you want is to make sure that this foundation is solid from day one and that minimal changes will happen in the future. You really want that everything is set up properly from day one. So we're looking at step 1, which is the structure, step 2, which is people, step 3, which is location, and step 4, which is the finance. So structure, people, location, and finance. These are the key decisions you have to make before you're establishing your entity. So we're going to go through the 9 key considerations that have to be made. And step 1 is structure. Decision 1 is the type of entity and the type of business scope you're going to actually create. Okay. So in terms of type of entities, these are the types of entities that exist in China. If you are a 100% foreign investor, there's only one of you, then you're going to set up a WFOE or a FICE. I hate this terminology. I still use it today because a lot of people Google it and this is what they know. Ultimately, Besides the representative office, every other entity, the last five, so wholly foreign owned, FICE, DOE, JV, and FIP, are limited liability companies. That's the actual structure. Why China has created these terms is because it really comes down to the business scope of the entity and the activities you're going to be performing in the Chinese market. All right. So a representative office is a liaison office. It can do no activities. It cannot physically trade. It's just a liaison office where you have the ability to hire people, but there are no transactions running for that entity. It is not revenue generating. A WFI is usually service oriented. A FICE is usually trade oriented. And that's what it will state in its business scope. Domestically owned enterprises means that the 100% owner, shareholder, is a mainland Chinese individual, company, person, whomever. Joint ventures generally refer to the fact that there's a Chinese and foreign mix. Of course, as a wholly owned foreign enterprise or a FICE, you can have one or more foreign investors in those entities. They are considered as joint ventures, but they're still under the scope of being considered as foreign type entities. Joint ventures is really the mix. Although, quite frankly, from a document perspective, they're all the same. Whenever there's a joint venture, you still need a joint venture, a shareholders agreement with this. So these are the types of entities. FIP, just to finish off, is usually for accounting firms and law firms where there are partnerships that are created. So it's more of a partnership ownership versus just a shareholder shares ownership. Choosing your business activity is vital. And I say this is vital because in China, you cannot create vague and broad business scopes, right? In Hong Kong, when you set up a company, you can just write import, export. In China, you can't do that. In China, you have to be specific about your industry, specific about your sector, specific about the individual activities that you're going to be performing in the market. One of the things that you have to be aware of is that you have to understand whether you are permitted to perform these activities in China as a 100% owned business. So you have to check the negative list that is created. The negative list is a series of industries and sectors that where you are not allowed to perform your business, okay? So they are either restricted or they are prohibited. And basically, what we always tell companies to do is, why don't you take a piece of paper, write the products or services, and then write all the activities you're going to be performing, which ultimately will then lead to a business scope, which will then also identify what type of entity you'll be creating. So I know I'm doing this a little bit backwards, but once you've developed your business scope, you'll know what type of entity will be suitable for you, both in the short and in the long term. And then you can decide on the entity that will work for you. So as an action plan for decision one, it is take a paper, write all your activities, products, services now in 5 years, in 10 years. Research your competitors that are already in the market. So you can ask any corporate service provider to go into the Ministry of Commerce. And if the information is public, then you can obtain everything from the name of the company, the address, the registered capital, to the corporate management structure, as well as to the business scope. And I like doing that type of activity because it gives you a nice starting point to understand what business scopes could actually look like when your competitors are already in the market. You want to make your scope as broad as possible, but this only stems from the fact that you've written everything down and you know exactly what you're planning on doing now in 5 years and in 10 years. And we try to create a business scope that encompasses that whole time frame. All right. And you've got to be prepared that the AIC will amend, they will adapt, they may even downside, they may reword things. But all they will be doing is rewording things from the Chinese version. And then it comes to the, it's literal translations, subtle translations, etc. Okay. Decision two comes down to the capital investment and the term of validity. Now, when you are establishing your company in China, you will have working capital. You're starting up a new business, you're a startup in China. You've got an entity, you've got no revenue coming in, or very few people have revenue coming in from day one. What capital do you need to pay off all of your initial expenses, whether that's rent, headcount, suppliers, third parties like logistics providers or TPs or media agencies or accounting professionals or legal firms? What capital do you need to sustain your business until revenue starts being generated and can then be used to cover those expenses? You want to create a number where you're thinking about the time frame to become cash flow positive, basically. And in China, there are no minimum capital requirements. It's up to you to decide the amount that you need. So in order to avoid any future bureaucracy, you really want to create a number that will sustain you in the long term for future growth, for current demand, etc. All right. So it's very important to think of these numbers very carefully. One of the biggest mistakes that companies make going into China is putting this number at such a low figure that there comes moments where they don't have capital to pay salaries. So, and it can last 2 to 3 months until you've got the money finally in from abroad, because there are applications and bureaucratic procedures you have to go to be able to upgrade your capital investment. There are times where you get kicked out of your office because you can't pay your rent. You start developing a poor image amongst suppliers because you can't pay their fees. So it is really, do not underestimate this. It's really important to create a budget for your China business, to know exactly, not just a budget. It's not just looking at a P&L. It's also doing a cash flow budget to really know how much is going out every single month, what can we project, and when is money coming in, right? It's really important to anticipate all of that. China is not as cheap as it used to be 18 years ago. The standard of living in places like Shanghai has gone up. Salaries have gone up. Rent has gone up. So you've really got to make sure you're calculating all of this wisely. So the action plan is the following. Nobody is going to ask for a business plan. Nobody's going to ask for a budget. Nobody wants to see any of this. It should, however, be done automatically by you. My first comment is that the Ministry of Commerce and the Tax Bureau, they like to see companies that invest at least 1 million RMB as registered capital. So the equivalent thereof, whether it's in euro or US dollars. And that will depend on the exchange rates at the time that you're setting up your business. They like to see it. Doesn't mean they won't approve your project. They just like to see those. It doesn't mean that you get any additional benefits. It doesn't mean that the application procedure goes faster. It just means that it inspires them that you're taking this project seriously. I have had the ability to set up a company for a client in China with a registered capital of 50,000 RMB, ultimately because they knew that from day one, revenue would be coming in to sustain the business, okay? So if that happens, by all means, you can go as low as 50,000 RMB, but you've got to calculate all of this wisely, okay? Now, it would also be good to not just calculate your budget for the first 12 months. We would recommend doing this over a 3 to 5 year period and really understanding what is the financial needs that you need in a company. There are two things that a lot of people underestimate when they go into China. One is the financial resources that are required, and the second is the time resources that are required. Just because you're developing an ecosystem and outsourcing everything to everyone doesn't mean you shouldn't be paying attention to your business, right? So you should definitely keep all of this in mind. When does the capital have to be injected? So this is why I've mentioned the term of validity. When you're establishing a company in China, you have a minimum of 10 years that you have to designate, or a maximum of 50 years, or you can choose any number in between. 6 months prior to the term of validity ending, you have to do a renewal process, all right? Now, there's no right number here. It really comes down to your commitment to the market, your risk level. But the fact is that if you say that my registered capital is 1 million RMB, and you say that I choose 50 years as my term of validity, you have 50 years to put in that 1 million RMB. All right. So it's just really important to take those considerations into mind. Step 2 is people. All right. And people are vital. Decision 3 is all about who's the shareholder going to be. Is the shareholder going to be an individual, or will it be a company? Remember, as foreign investors, the individual should be a foreign person, or it should be a company that is registered abroad, okay? There's no right or wrong answer here. But again, it's about preparation. If you're going to take the option of individual, if you're going to take the option of company, talk to tax advisors in your home country about what will be the impact on your company by having a subsidiary in China or as an individual owning an entity in China. What tax impact will that have on you if you sell the company, if you earn dividends on that company? This is your homework that you need to do. This is the preparation work you need to do in your home jurisdiction to ultimately then understand who will be the shareholder for the Chinese entity. Okay? There's no right or wrong here as long as you've done the preparation work. Now, some people might say, do I need an offshore holding company? Now, historically, this is what was done in China. People would set up a Hong Kong company. It was the gateway to China, and that was considered their holding entity. Nowadays, with BEPS, OECD regulations, you really need to do homework on this question, all right? From a China perspective, if you set up an entity in a holding jurisdiction, if you set up an offshore holding company in a jurisdiction that is a tax haven, the tax officers know about tax havens in China, all right? They're fully aware of why you use them. So they're going to look at tax rates with the double taxation agreements. They're going to look at where the place of effective management is for the Chinese company, and you're going to have to show proof of that. They're going to look at the indirect transfer of assets, if that actually occurs. And if you cannot prove economic or commercial substance, then you may not be benefiting from any of the double taxation agreements. So is an offshore holding company worthwhile? It could be, as long as, again, you're doing your homework and you're creating this holding company to be effective from day one as a place that holds commercial and economic substance. Hong Kong, is it still something of trend? No, I would say it like that. No, it's not actually used on trend. We have more and more companies that are investing directly into China from their home jurisdictions. Hong Kong only comes into play if you're looking at really the bigger picture of your APAC expansion. And Hong Kong could very well be your APAC regional hub that will have economic and commercial substance because it is a centralized location that will manage not just the business in China, but potentially the business in other Asian countries. If you're using Hong Kong as a commercial and economic entity, then by all means, you can use that entity to set up in China because you've got the benefits associated with it with double taxation agreements. But if it's purely for holding purposes, my opinion is why waste your money on maintaining an entity you're not even using? You won't even get benefits from it because you can't show commercial and economic substance. So what's the point? And nowadays, Hong Kong is still considered a gateway to China, but there are other locations that people are also taking into consideration, like Singapore and other places. So, it's not just Hong Kong anymore. Decision 4 comes under corporate management. So when you're establishing your entity in China, this is what the corporate management structure looks like. And you've got two options. The left, as you're looking at your screen, the left and the right. The difference between the two is under board of directors and executive director. So you can have a board of directors, it's a minimum of 3 people, maximum of 15, or you can have one person who acts as the executive director. So if you've got a more lean management system in your head office, you would probably go with the right option. And if you've got larger amount of decision makers related to China, you'll probably go on the left. All right. Now, the key thing here is that the supervisor is appointed by the shareholder, and his or her role is to supervise the activities that the board, the legal rep, and the GM are doing. Because there are some individuals who don't take these jobs seriously. And the supervisor has to report to the shareholder should there be anything that is in non-compliance. Okay, that's their role. The board of directors is basically coming up with the overall strategy of the business. The legal rep is the legal face of the company. They will be the first ones contacted should anything arise within the organization, bankruptcy, legal activity, criminal activity, etc. Then you got the general manager that's handling the day-to-day functions. Okay. None of these people need to reside in China. None. I just want to highlight that. Now, delegating power always requires a certain degree of trust. And how do you formulate that trust? By appointing people you barely might know, right? First of all, I wouldn't do that. I would never appoint somebody you've only just met or just hired. But if you decide to take that route, make sure you're creating corporate governance within your Chinese company to mitigate any form of serious exposure to risks. Okay? So as you're setting up your company, the immediate follow-up action is to create corporate governance within this organization. Okay? And even with the people that are residing outside of China, you still want to have this corporate governance in place. So, questions to ask your management about the China operations, because this will help you to understand who you should appoint within the corporate management. First of all, who or what is making the investment to China? Is it a company? Is it an individual? Is it going to be a new type of entity? Who is the China company decision maker? Who in the company will be the ultimate decision maker about China? Will there be one person or will there be many? Who will be the CFO, finance manager responsible for the China business? Will you hire somebody locally? Will it be somebody abroad? Who will that be? Will you outsource the function? Who will be the bank signatory, or who will be approving payments? Who will keep control of the company chops? Now, as you can see, a lot of these questions are gearing towards corporate governance. All right. Other questions might be, who is keeping, I don't have that listed here, but I just want to go back. Who is keeping the business licenses and all of the corporate documents that will be issued? Who's going to be the authorized signatory for the shareholder? Will you choose a board of directors or an executive director? Will be appointed in all of the corporate management meetings. So ultimately, the corporate governance questions should lead you into the questions from 6 to 11 based on the function of the business. Who are decision makers? Who is going to go on the bank account? Who is going to keep the legal documents of the company? All right, this will help you to clarify. And again, if you need any advice on this, that's what we're here for, right? If you need to brainstorm with me, we'd be happy to do that. Step 3 is about location. Where in China are you actually going to establish your company, right? Now, you might find it weird as why I'm starting off with decision number 5, which is company name for China. The reason why I'm doing that is because when you establish your company in China, you need to have the name of the city that you're establishing in the name, okay? So just a couple of points about the company name. This is the format for foreign invested companies. You've got the company name, the business type, which relates to the business scope that I mentioned earlier. You've got the city in which you're going to establish the company, and then company limited. So if you look at the English name of Woodburn, we are Woodburn Management Consulting Shanghai Company Limited. Okay. And then we have our Chinese name for that, for Woodburn, for the Woodburn side of things. So the business scope will dictate the business type, and the city will dictate where you're actually establishing your company. Only Fortune 500 companies can have China in their name and not the city. And that's a very lengthy application procedure to get China in the name. And I say this for the Chinese name of the company. If we, in our English name, and we can put this on the chop, wanted to put Woodburn Management Consulting China Company Limited, we could, but the Chinese name has to be specific to the city. Now, questions to ask your management regarding the name of the company is, how important is the Chinese name to you? Are you looking to brand your Chinese name? It's not easy to get Chinese names now for companies, especially if you go into big cities like Shanghai, Beijing, where there are tens of thousands of applications on a daily basis for company registrations. You've also got to look at the trademark registration versus the domain name registration versus the Chinese company name registration. Is this all important? Should it all be the same? There's some instances where it will be impossible to have it all the same. These are 3 separate applications that are not tied one with the other. And as a consequence, it can be difficult to have a matching trademark registration with a Chinese company name with a domain name, okay? Now, If you're struggling to find a Chinese name, you can always go to a media agency. This is part of their service listing where they can help you to find out what would be a great Chinese name for your business. And that alleviates a bit of the pain that you might have trying to come up with something. But I just want to emphasize, you've really got to think about the Chinese company name versus the trademark registration versus the domain registration, and the importance all of that has for you. Decision 6 is around a lease agreement for a registered office address, which is why location is such a big deal. For me, decision 6 is one of the top 2 decisions that have to be made. So it's something that people rush. So I want to go through with you very briefly. I've done a whole webinar just on this topic, but I do want to go very briefly with you on why this is so important. First, there are legal consequences of selecting your location in China. 1, a registered office address is a must for any type of company registration, and it must be your operational office as well. So virtual office concepts are not permitted in China. Virtual office addresses are illegal and should be avoided as much as possible. The consequences of being caught having an illegal virtual office address is that bank accounts can become frozen and random government inspections can occur, which will all lead to your business being halted. A 1-year lease agreement must be signed. A minimum of a 1-year lease agreement must be signed. Any agreement shorter will be denied during the registration process. So if you are having trouble with your decisions and you've signed a lease agreement because you've rushed that, and 6 months down the line, you're ready to now set up, you actually have to re-sign the lease agreement, because at the point of registration, it needs to have been valid for at least 12 months. The type of property is of utmost importance as it indicates your business scope. So if your business scope says that you are a factory or a warehouse, if your business scope says that you're a manufacturing business, then you need to be located in a factory or warehouse. If your business says trade or service, it should be commercial. If you're doing retail, then you need to have a retail shop. And as part of the lease agreement documents, there is going to be the ownership certificate of the property, which will highlight what type of property it actually is, and it all has to match. Okay, so we've got to use common sense with this. The key thing to remember in China is that, unlike in Hong Kong, where you can register thousands of companies in one registered office address, in China, only one company can be registered in one registered office space. Okay, so it's also really important when you're choosing a location, if you're choosing, let's say, not a business center, but a proper office, that the previous tenant has been removed from the real estate bureau registration, because otherwise you won't be able to register your company in that location. Now, if you are suddenly realizing that Shanghai is not the location you want to be in, but actually you should be in Beijing, and you want to change cities, you cannot just pick up your company and relocate it. You actually have to liquidate your company and set up new. Or the alternative is setting up a branch office in the new location. Okay, so you need to be aware of these points. Again, it's all about the preparation work, right? And really knowing where you want to be located. Real estate agencies can offer to do location studies for you if that is something you're looking for. Tax consequences of selecting your location in China. Each city is made up of districts. So in Shanghai, there are over 12 districts. When you choose an office space, remember that you're registering your company in that city, Shanghai, but then you're registering your tax status within that district in the city. That's a district, okay? And that's where your relationships will start building with the government offices in that district. What you need to be aware of is that there are still local, state, and district governments that will offer certain incentives. First of all, you need to have proof that these are valid and true incentives, not that they're just enticing you and it's all fake. You have to understand what all the criteria is to be able to benefit from these incentives. and you need to have everything in writing. Okay. I'm not saying ignore these incentives. Just make sure you've done your homework and you're prepared, that you know these incentives are real. Should you wish to change office space and move to a new district in the future, you've got to understand the tax consequences. So if I am now based in Huangpu district and I want to now move offices because I'm expanding into a bigger space into Jing'an, I have to do a closure audit with the Huangpu Tax Bureau and reopen with the Jing'an Tax Bureau. And all of this can cause a halt in my business because I may not be able to purchase and issue VAT invoices. And the halt could be up to 3 months. So you have to be very clear ahead of time that you are aware of these things and you know exactly where you want to be located. Now, as an action plan, obviously, you have to understand first in which city you want to be located, which district you want to be located in. But from a cost perspective, think very carefully whether it makes sense to go in a business center or whether you want to be in an operational office. And what are the pros and cons of being in both, right? So step 4, there's a lot of content today, so I apologize for this, but we are on the last step. So step 4 is finance, okay? And what do you have to consider in terms of finance? Well, number 1 is the bank. Where are you going to do your banking? Are you going to work with a Western bank, with a local bank? And again, I've done a webinar just on this topic as well. During the incorporation process of setting up your bank account, do your homework. Make sure you're choosing the right bank that fits your short and long-term needs. Don't just choose your bank based on the incorporation process and how easier it might be for you. Make sure you're really discussing with the bank about what they can offer you in terms of services, okay? Now, your lawyers or your legal team or your corporate service providers, they will handle all the bank account opening. And in places like Shanghai, Zoom conference calls under COVID times are accepted. But you have to keep in mind that legal rep passports do have to be flown over for the bank account opening process, okay? But Zoom conference calls are all feasible. In places like Shenzhen, they still are not allowing Zoom calls. The legal rep still has to physically go to Shenzhen to open the bank account. So this has obviously prevented a lot of companies from establishing in Shenzhen because the legal rep is not willing to fly and do the quarantine that is required for just a 2-hour bank meeting. So be aware of all of this. Since August 2020, banks are required by the People's Bank of China, the PBOC, to visit your registered office address to make sure that it's not a virtual office location. So that is linked to the location decision that has to be made. And the whole bank account opening process can take anywhere between 25 and 30 working days, because that's the KYC process, the know your client process the bank is going to perform on you. Then obviously you need to do your online banking operation, which is a completely separate online application done at the bank. And this is an additional 10 working days. So ultimately you're looking at anywhere between 35 and 40 working days just to get the bank accounts up and running, okay? Then the registered capital will be remitted, either all or a certain percentage will be remitted from the shareholder. And the initial 3 months of operation, you will have to show proof of upcoming payments to the bank in order to be able to start using that capital. They won't just let you use it freely. So you'll have to show rental contracts, employment contracts, etc., to be able to start using those funds for your expenses. And remember, do your homework on which bank you want to work with, right? This partnership will last for the full validity of your organization. Don't just look at the bank account opening process and that's it. Decision 8 is the value-added tax status. So when you are establishing your company, you open your bank account, you need to make a decision right there and then if you plan on staying as a general VAT taxpayer, or you're going to plan on, if you're going to stay as a small scale taxpayer or upgrade yourself immediately to becoming a general VAT taxpayer. This is the difference between both. So VAT is a sales tax in China. There are very strict and rigid rules about how VAT is handled in China. I've again done a whole webinar, 2 webinars just on this topic. So briefly for these purposes, a small scale taxpayer means that when you are transacting, and I'm going to use this as the formula as an example, the output VAT minus the input VAT is what your VAT payable is. The ability as a general VAT taxpayer means that you have the ability to deduct the input VAT. Okay. Now you might all think, well, that's normal. Well, as a service company, I don't have a lot of input VAT. So for me, when I do a simulation about what status I should have, it would actually be better for me to remain as a small scale taxpayer. And basically a small scale taxpayer just means that I have no input VAT and I pay a much smaller VAT rate compared to the general VAT taxpayer. Okay. But even if you're trading, you should evaluate what is the better status for you and do these types of simulations. In China, a general VAT taxpayer, if they're transacting in general goods, it's 13%. Service is 6%. If you're a small scale taxpayer, it's at 3% for everything. Under COVID right now, it's 1%. All right. So it's very, again, it's all about preparation. What we would recommend is doing simulations. So if you've done your budget and you understand revenue that's coming in, expenses that are going out, we can create simulations where you can identify what is a better tax status to have. You can always stay as a small scale taxpayer and then upgrade yourself to a general VAT. But once you're a general VAT, there's no turning back. And what we want to create is a tax optimized structure, right? We want to make sure we're saving our taxes, not that we're paying a fortune when we don't have to. The last decision is about appointment of the finance manager. So under the corporate management, I didn't add this point because I consider it as something that's separate. But when you're establishing your company, you do have to provide the name and ID of your finance manager. So this is the point where you need to make a decision whether you're going to build an in-house team for finance or whether you're going to outsource the finance in China. All right, and I just want to go through a couple of points here. One is cost. What is the cost of a finance manager? What is the cost of outsourcing it? You need to do your homework on that and weigh out the balances on that. Initially, most likely, it's going to be cheaper to outsource than hire in-house. But you also have to know then when would be the right time to hire somebody in-house. Talent. You are new to the Chinese market, so you might not be fully aware of what type of talent you need to have or what type of skill set you need to have in an accountant. Hiring somebody who's had 1 to 2 years of experience is going to be useless to you. You need to always think about hiring somebody who's got at least 7 to 10 years of experience in the industry sector that you're working in, so that they can teach you ultimately what you need to know. Or you work with an outsourced provider that will teach you on a daily basis what you need to know, right? But you need somebody to teach you. And a new graduate won't have that ability. They have no experience. Recruitment anywhere in the world is tedious, right? And do you have the time initially to do that recruitment process, or is it easier just to outsource? Again, it's a matter of balancing out, right? Focus is, again, hiring somebody will require you to spend time on focusing on them for the onboarding process, getting them acclimatized to the business, etc. Outsourcing is generally very quick because these outsourced providers in general know how to already create all of the documents based on what you need and can adapt very swiftly. So it's where do you want to place your focus, right? Is it on the onboarding or is it just outsourcing somebody, etc.? Specialization, if you are in a key industry or sector, again, you want to hire somebody with that specialization, or you want to outsource it to a provider who has that specialization. And then last but not least is language and culture. Honestly, the amount of companies I have met where the GMs, anybody from the HQ cannot communicate with the accountant is incredible. All right. For some reason, when you're hiring accountants, you don't place emphasis on the language ability. I don't understand why. The one person you need to be communicating with thoroughly, and I'll be highlighting that in tomorrow's conversation, is your accountant. Your accountant is dealing your numbers. Your accountant is giving you the status quo right now of where you're standing. The accountant is going to tell you whether you have the ability to scale up or whether you're financially incapable of doing that. Your accountant, again, your accountant is going to be doing all of this for you, the analytical work. And if you cannot communicate with them, what's the point of having them? All right. And there's always going to be cultural nuances that are associated with the accountants, particularly the fact that accountants, I would generalize this saying it's a global phenomenon, but in China for sure, they are reactive, non-sociable individuals. So you need to be proactive with them. You need to be able to communicate with them. You need to instill these certain SOPs, standard operating procedures, to get them to work with. All right. So these are the pros and cons, guys, about whether you're going to hire somebody in-house or whether you're going to outsource. And, you should think of it as a phased approach where potentially you're outsourcing it initially and then eventually hiring in-house. So that's the incorporation blueprint. I managed to get that done in 50 minutes. But just to recap, there are 4 steps: structure, people, location, and finance. And there are these 9 key considerations that have to be made when you're going into the market. So I'd love to hear what your biggest takeaway was from today. Again, if you're watching this live or you're watching on replay, let me know. Even if you give me 1 keyword, that'd be fabulous. How you can work with me is we provide incorporation advisory. We can actually also do the incorporations in China. We do the competitor business scope benchmarkings. We can also be appointed as supervisors, finance managers, non-executive directors. We offer the tax advisory, the VAT simulations, for example. And then we can also do the outsourcing solutions for accounting, tax, payroll, and compliance. So this encompasses all of the services that we offer. So no questions have popped in thus far, but I will hang out a couple of minutes if any questions do start coming in. If you're interested in registering a company in China, don't hesitate to reach out. You can email me at christina@woodburnglobal.com, and we'll set up a call and see specifically what you're looking to do, where you're looking to register, and basically going through these 9 key decisions that have to be made to understand a little bit your story. So if you are interested in setting up, let me know. Happy to have a conversation. And just to finish off, this is the end of session 2. We've got 3 more sessions. So Chinese accountant tomorrow, hiring people Thursday, and then the corporate management on Friday. If you haven't registered, go to woodburnglobal.com/events, and I hope to see you there. Thank you very much. Take care and goodbye.